Even when there is blood in the streets, the strong always eat well. My friends, there's going to be blood in the streets at some point in your trading career. In fact, many points in your trading career, unless this ridiculous inflation just keeps going and inflates the market and makes every dollar worth less, so the stock market just inflates like a balloon. Doesn't mean much of anything except your money's becoming worthless and worth less than maybe the market's going up. Hopefully, with the new administration, getting a handle on that is going to be a top priority. That's what they say. They appear to understand it. I'm hopeful in that regard. But where are we right now and where are we going? And are you prepared? Do you know how the market works? Do you know how to trade? Are you comfortable with inverse funds or pulling your money out of the market? Are you practicing those kinds of things when the market does go into a downslide? Because it will. I've lived through the dot-com bubble, 2008. I've seen the COVID debacle. I've watched it all where the market has taken big hits. And in that dot-com bubble, which many of you are too young for that, I mean, that just tore us apart. Thought I was a genius watching my stocks just go through the roof and then, of course, start crashing down around me. So you have to prepare now. That's why I say, even when there's blood in the streets, the strong always eat well, because they know what to do. Let's jump into these charts. Hope you enjoyed what I started doing yesterday, giving you some probabilities, expected moves, buy zones, sell zones, whether the trend is bullish. Let's jump into it first. Here's where we are on the S&P. We're up just a little bit, 0.08%. We are currently bullish on the S&P with a 70% probability. And again, we're not a stock calling service or an education firm. I want you to listen to us, practice trade with us. Prove this to yourself by doing it in practice trades. When you think you're getting really good at it, small amount of money, say $100, a fractional share in the S&P, if your broker allow you to do that, maybe $100. If you lose 2%, it's $2. If you lose 20%, it's $20. Please do not go out there throwing your money away, because there are people out there, there are market makers, there are folks that will strip every penny from you, and you'll be like the majority of folks who give up, say the stock market's a racket, it's an insider thing, there's no way to win, it's gambling. My friends, when you understand how it works, it's beautiful. How do you become an expert? It's like anything else. How do you get to Carnegie Hall? Practice. So we're looking at the S&P 500, like we said, just barely up for the day. You can see the first day of the latest 2-day candles, a green spinning top. You can see things down in the morning popping up a little bit in the afternoon, getting right up to average volume in the afternoon. We currently are bullish on the S&P, about a 70% probability of an expected move somewhere up. Started around 600, probably go to about 610. The buy zone is between 600 and 603. We're about $2.31 above that, having closed at 605.31 today. You see a pullback on there. You might look to jump in around the $600, $603 mark. Sell zone somewhere around the 615 mark or so. We're going to see some resistance up there. Now, that is where we are on the S&P 500. We go to the tech stocks. They're down a little bit for the day. See, down in the morning, didn't pull up in the afternoon. Doji there in the afternoon. Again, look, for the last several days, well, last 2.5 days, we've had very weak volume. Things popped up, pulled down. We look at where we are for the week. We haven't hit the highs of the last 3 weeks yet. Do have a green candle, not a lot of volume there, not a lot of volume on the 2-day. It's not reaching the prior highs. So again, some weakness here. We're mildly bullish, about 65% probability of up moves on the NASDAQ 100. Our expected move is between about 525 to 535. We're currently at 527.99. Buy point 525 to 527. We're about $1 over that now. So you see a pullback there. You might consider, as you look at the charts and take the temperature of the market, might consider jumping in that buy zone. Sell zones around 531 to 538 where we see some resistance. Okay, so as we are looking, you can see where the prior high was, where things hit up there, that 538 mark. That's what's giving us that possible resistance, where it went up to the high before, 538.28. So again, you always want to know your levels of resistance, your levels of support. Those things help you. Now, where are we with 20-year U.S. government bonds? After 3 weeks of nice up movement, slowing down, we see a red down candle on the 2-day. Not a lot of volume. Not a lot of volume on the half-day, but moving down for the day, 0.65%. We are looking at a sideways slide right now. We're bearish mildly. Again, probabilities low, around 55%. I like 75-80% probability to be jumping into a trade. And again, just keep that in mind as you start looking and seeing this as it shapes up. We see an expected move from about, the $87.89 point. The buy zone is, again, we're talking about a short position. So selling at about 91.50 and then buying back somewhere around the 87.88 mark. So again, if you're looking to jump into TBF, Tango Bravo Foxtrot, that is, of course, that's the inverse fund. Keep those same kind of percentages and numbers in mind if that is what you are doing. So again, we are currently at 88.43 right now. So if it bumps up and then starts to pull back, that might be when you look to jump into a short position there. Now, what's going on with gold? Well, we're very bullish on gold. That's their highest probability, is 75% of continued up moves. We see the expected up move between about the 266 mark, which it has already passed, up to 270, where we start encountering some significant resistance. The buy zone is from $65 to $66. We're just above that, so we see a pullback in gold. Might give the ability to jump in there and ride that up to around the 270, 272 mark. And again, as we look at gold, lots of volume last week, are already up to average volume this week, reaching higher highs. As we look at where we were on the Monday candle with all that volume, you can see just huge volume on gold. It is ranked up for 8 solid days of just super high volume. Prices going up. That Monday candle reached a high of 268.66, 268.36, so we've not reached that high yet. We can see sort of a plateauing there for the last 2 days. Gold pulling back a little bit, 0.37. So again, keep your eye on the price there. You see gold, again, if it does continue to pull back a little bit, give you a buy-in spot around the 265 to 266 mark, right it on up to 270, 272. And again, 75% probability, we believe, of that up movement. Lastly, we'll go to HODL. What do we see there with the Bitcoin ETF? About a 60% bearish move expected from about the 110 to the 106 mark. Right now, it's at 107. As we continue to watch this, of course, the sell zone would be somewhere in the 112 to 114, pops up there a little bit during the day and then starts to pull back. You might look at letting her get back down to about the 106 mark. Right now it's already at 107.72, so you don't want to jump in too late, and it's a 60% probability of it stopping around there. So we'll continue to keep an eye on things. Again, this is our forecast for about the next 5 days on all of these trend directions, probabilities, expected moves, buy zones, and sell zones. And of course, you can see volume just barely up to average on the afternoon with that big down move. for Bitcoin. Not a lot of volume on the 2-day, and we look at the weekly, and again, not a lot of volume there, ranking up right now. After things popped to the highs back in mid-December, slid off, popped up there that week beginning the 21st of January, and then blowing off some steam since then. So we'll continue to keep our eye on things. Hopefully when Bitcoin turns around, it'll give us a real opportunity to jump into it and ride that gravy train on a good practice trade. Remember, practice trade the things you're interested in. Every chance you get, pull the trigger on those things. Watch the volume. Watch the Heiken Ashi candlesticks. That will tell you the psychology of the market. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.